How did hedge funds kick off 2024? The answer might surprise you. It was, in fact, their best quarter since the pandemic, according to data from the Citco Group. The charge was led by equity and multi-strategy funds, with a weighted average return of 7.3% across all strategies. This built on the momentum of 2023, setting the stage for a promising year ahead. Equity funds topped the charts with an impressive 8.49%, followed closely by multi-strategy at 7.59%, and event-driven strategies not too far behind at 4.03%. But let's not forget the other strategies that also posted positive returns, such as fixed income arbitrage, commodities, and global macro. So in short, 2024 started with a bang for hedge funds, with all strategies posting positive returns. It's shaping up to be a year of interesting opportunities and strong performances in the hedge fund arena. But how did the size of the funds impact their performance, you may wonder? Well, let's delve into that. When we look at assets under administration, or AUA, we see an interesting trend. The giants of the industry, those funds teeming with over $3 billion in assets, led the charge with a return of 8.26%. As we go down the scale, the returns follow suit. Funds with assets between $1 and $3 billion saw returns of 6.69%. Those with $500 million to $1 billion in assets weren't far behind, bringing in returns of 5.15%. Venturing further down, we find funds with $200 million to $500 million in assets, which posted returns of 4.72%. And the smallest of the lot, those with under $200 million in AUA, returned a respectable 3.54%. Clearly, the size of the fund had a significant impact on its performance in the first quarter of 2024. Despite the positive returns, what about the outflows and inflows? Now here's something to chew on. The first quarter of 2024 saw net outflows of $4.4 billion. This was majorly driven by equity strategies, which alone accounted for outflows of $4.1 billion. Multi-strategy funds and emerging markets weren't spared either, experiencing their own fair share of outflows. On the flip side, hybrid funds emerged as the leaders of inflows, raking in a tidy sum of $1.1 billion. Arbitrage, fund of funds, and global macro also enjoyed smaller, yet significant inflows. Let's not forget the record trading volumes, fueled by high-frequency trading in equities and derivatives. Add to that the sustained interest in fixed income and commodities, and you have a rather vibrant trading scene. So, while there were some outflows, the overall picture remains positive, with record trading volumes and sustained interest in various strategies. What do experts have to say about this performance? Declan Quilligan, a prominent figure in hedge fund services at Citco, shares his insights. He emphasizes that rallying stocks and record commodity prices have given 2024 a robust start in hedge fund performance. Even with significant gains already seen, Quilligan sees a broad spectrum of opportunities for hedge fund managers. He notes that stronger economic growth, not rate cuts, is now the main driver. In conclusion, 2024 has started off strong for hedge funds, and the future looks promising.